Have you ever wondered if the US prints infinite amounts of money? It sure feels like it, doesn't it? But what is really going on and how can you protect your money? So we're gonna talk about that right now. So let's talk about this. Can they print infinite amounts of money? Yes and no. They sure like to think they do, and in many cases they've found ways to do it. Now you gotta understand there's really two groups at play here that make this work. First, there's the US Treasury, and we're talking about the Americans. Sorry for those in Canada, this might kind of apply to you too. Bank of England, good luck to you. Mate, you know. Oh, sorry, that was Australia. Whatever. Okay. Anyways, there's the Treasury, US Treasury. They are the ones that like to spend the money. They are often the politicians are controlling that. They're the ones that will say, hey, should we be printing more money or not? They're the ones that are dictating how the money gets spent. Now, there's no secret, the government has been amazingly crappy at using their money in good, productive ways, right? We know that the national debt's been climbing and climbing and climbing, almost out of control, especially since 2020. It's been climbing harder and faster than in history. Heck, even during the Revolutionary War, they were having major issues with inflation, major issues with what was going on because their currency was worth nothing. Well, Treasury was the one in charge of everything, trying to make sure they were fiscally responsible with the government. About a little over 100 years ago, there's another organization that was created called the Federal Reserve, or the Feds, as you hear them say. The funny thing about the Feds, one, they're not federal. And two, they really don't have much of a reserve, although they tend to think they do. All right, the Feds or the Federal Reserve, these guys came into play. These guys are just bankers. Big bankers. These guys said, hey, we need to come in here. We need to see if we can create some real uniformity with the banks. And because we understand that the strength of our economy doesn't really have a lot to do with, just with stock markets and jobs and things like that. That's just a little symptom of it. But really the economy is based on one thing, the flow of money. How much does money exchange? How fast does money move? When money stops moving, when it comes to a stop, that's when things collapse. If money moves and moves really fast, everybody becomes wealthier. Understand this key principle is that exchange creates wealth. The faster that money exchanges hands, the wealthier everybody becomes. The truth is, you can stop printing money and still get people wealthy. How? Well, take this example. Say that you have a $100 bill, a nice little Franklin here, right? You got that $100 bill. And you say, you know what? I'm gonna use this because I wanna buy blank. And so you go and buy blank from the store. And you say, yes. You bought it because that was worth more in your life than just a little Franklin sitting there in your wallet saying, buy a new wallet, right? You wanted something more with it. So you go and use that $100 bill. But that store doesn't just keep it forever. They're gonna take that money, they're gonna spend it, maybe pay their own suppliers or vendors and people like that. Well, they're gonna get that $100 bill and they're gonna go and buy suppliers or people like maybe in China and people like that to go and make those things. And then those people are gonna spend money and they're gonna go invest in other things. And it just cycles around throughout the economy, right? Well, if money stops changing hands, no one gets paid. This is why the Great Depression became such a big depression. People got fearful, they started holding on to money didn't change hands, and everything collapsed. So what did they do? The government tried to incentivize people to use and spend money, right? They started trying to spend government money, go into debt to get people some jobs. And then if they got people to relax a little bit, say, okay, I'm good now. I'm gonna start spending my money because I was afraid to spend anything because we were having deflation happening during those days. So they started spending money and things started to slowly pick back up again. Here's the key thing with the economy. It's made not by just money liquidity, but money credit. How much ability do we have to access money so that that money can then exchange? Well, the Feds are key to that. They are our credit lenders. They're the bankers, right? They're the ones that allow us to be able to spend the money more. So the Treasury is looking to the Feds to say, hey, we want to be able to spend more money, but we only got so much. Well, the Feds say, all right, well, you can spend based on our country's balance sheet, as they always hear them say. What's in this balance sheet? Well, they've got all kinds of different investments and so forth. It could be mortgage-backed securities. They could be investing in, believe it or not, I think they might even be investing in digital currencies and maybe trying to price control that. Just so you know, the Fed's main job is not to make you more money. The Fed's main job is to really preserve the value of the dollar, to try to keep it strong. That's why the Feds raised interest rates, because what they're doing, when they raise interest rates, that drives up what are called bonds. Bonds are debt that the government issues. Government bonds are really just government debt. They're saying, hey, we need more money. Can you buy our debt? Well, if the feds raise interest rates, especially faster than the other countries did, which they did, guess what? Other countries start buying our bonds. They start buying our debt. And that allows the government to now spend more money. Not to mention, the feds keep saying they're trying to keep inflation under control. The truth is they're not. And the truth is the politicians also don't want to stop spending money because they have so much fun doing it. They're like, party! They're doing all their kind of things to enjoy spending your hard-earned tax dollars to then never pay it back. That's the key, guys, is that you think they're going to try to pay off that debt. They will never pay off their government debt because they know the interest rate that they're paying for the use of that money to those bonds are less than inflation. So as long as the inflation is higher than what they're doing here, they're fine. So that's how they print it. They can keep printing because if inflation just keeps going up and up and up and people keep buying these bonds, keep buying their debts, as long as people are buying their debts, they have money to use and invest, right? It's the same as you. If the bank just kept saying, hey, guess what? I just raised your credit limit. I just raised it up some more. Here's another $10,000, $20,000, $50,000. Congratulations, you're a winner. Everybody gets a credit card. Right? That's what it's like. But the government gets the same thing because they work hand in hand with the feds to make sure that that happens. That is why you'll never see the government pay off their debt. They will be in debt forever unless there's some major changes or there's a massive collapse in the world. But for the most part, the government has no intentions of ever paying off their debt. Just like you. If you knew you had debt, but then they said, hey, you know what? You can have debt, but truth is you can make more money investing it elsewhere. You might second guess about trying to pay off your mortgage, wouldn't you? If you said, hey, my mortgage is at 4% interest, but I'm making 10% interest, why would I pay that off? It would cost me money. Well, I'm gonna go for the 10% interest and pay for my mortgage for me. And then some. It pays for your debt. Government's doing the same thing. They're just letting inflation pay their debt for them because inflation runs faster than what their interests are being charged on their bonds. And now I'm making this overly simplistic. I know there's gonna be some of you there like saying, well, actually, it works like this and this and this, Chris. I know, I'm just trying to put this in layman's terms to make it easy for you to understand. But yes, there are a lot of different exceptions, a lot of other moving parts going on. I'm just trying to keep it basic and simple. But really it comes down to you, right? Because this is what we're really talking about is, if they can print infinite amounts of money, this will drive up inflation. They don't mind inflation. They might say, oh, 2% is our goal. No, not really. And we already know that the government reported inflation is not truly what it is. It's double, at least double, whatever they report it to be. So how do you protect your money? You need to, one, make sure that you don't lose money, and then two, that you make more than that inflation, because they're going to keep printing and spending money like crazy, driving up inflation, at least to some level or another, right? So that they can keep building in more debt in their scenario, right? So one, I don't recommend buying government bonds. That's the one thing for sure. Don't buy more of their debt. I'm not saying this is investment advice or anything, but I'm just saying that may not be the place you want to put your money. But it is a place that is probably going to be around a long time. So if you want to protect your money, you got to have an inflation hedge and you got to make sure you don't lose money. At worst case scenario, I'd say go for something that's guaranteed, that's got some real guarantees behind it that you don't lose money. There's very few places like that. A savings account is one of those places, but it's just not enough, is it? It's going to lose inflation so badly. So I like to go for a supercharged tax-free savings account. This is where I use our infinite banking policies or using whole life insurance designed specifically where you lower the costs of insurance as low as you can go while allowing the cash inside of it to grow more. It's not the death benefit that we're trying to grow. We're trying to grow this tax-free savings account that you can build inside these life insurance policies. That right there, if I know I can make at least 5 or 6% tax-free, because I don't get taxed on that, where on my savings account, I get taxed on 0.nothing%. I can make that money tax-free, allow me to get a little bit of an inflation hedge. But I don't stop there. But wait, there's more. Because if I were just to stop there, it'd be okay, but you're not really gonna beat inflation. You need something more. This is where I look for other investments, alternative investments. This is where I look at things that are inflation resistant. Things like real estate. The great thing is, the more that the feds keep printing more money and driving up inflation, that also drives up real assets. Real assets. Yes, it does affect the stock market a little bit, but stocks can be actually beat up by inflation, especially if their profits go down. You don't want to be putting your money there. So you want to make sure that you get real assets like real estate. This is also why I look at things like commodities, even things like oil and gas, or buying a little bit of gold and silver. Not a lot, but a little bit just to kind of protect the savings I have sitting around that maybe is not making any money right now. So that's the key thing that you do there, is that put in money in places that are real assets and they have good inflation resistant returns. Guys, if you thought this video was great, be sure to check out my reacts video to the stock market wiping out Americans' wealth. It's sad, but it's true. Check that out now.